Okay, so our final presenter for today, and Phil, I'm so sorry. I know you're in London at the moment, and we have sort of pushed along a lot longer than we thought we were going to. But we have Phil Mitchell, who is the non-executive chair of Aura Energy with the ticker code AEE. Aura Energy is an Australian-based mineral exploration company with major uranium and polymetallic projects in Africa and Europe. The company is focused on developing a uranium mine at the Tiris Uranium Project, Tiris rather, and major greenfield uranium discovery in Mauritania. Phil, I'm going to hand over to you.
Look, Jane, thank you for hosting this opportunity and for encouraging a group of pretty interesting people to come and talk to us. I think Duncan's gone off to do something useful, but he needs a hearty congratulations for coming to market exactly at the right time, and he's ramping up nicely. Guy, thank you for your introduction and industry overview. I think all of us are pretty excited about being in the uranium industry at the moment, and for Aura, we're a near-term producer. We are ready to go at Tiris in Mauritania, and we're sorting out some money, and so we're hoping to be chasing Duncan into production pretty soon. Jane, do you want to go through to let's go to the next one. So we're listed on the Australian Stock Exchange. We have a market cap of about 125 million with about 1 billion shares on issue. We have two projects, Tiris in Mauritania. The project is 85% owned by us and 15% owned by the government. It's a 93 million pound resource, and we've done the feasibility study, we've done the feed study, and we're just polishing off capital costs and polishing off fundraising at the moment. We also have a very large project in Sweden. I'll talk a little bit about Sweden later on, but I'm pretty excited. And somebody mentioned earlier that Sweden has banned uranium mining for the last few years, but the government has said recently that it's going to change that existing ban, and that will probably happen on the 1st of January 2026. The legislation's being prepared. Our team were with the Swedish government and at the Parliament last week, and very positive messages. We think the ban will be lifted on the 1st of January 2026. So two very interesting projects. And Jane, if you go to the next slide. Guy has taken us through the industry position. Oh, no, you can move on from that, Jane. Guy has taken us through the industry position. You can see the supply gap that comes from the WNA forecasts. People have talked about 61 reactors, talked about the reactors that are in operation. But one area that we haven't had a proper conversation about is energy intensity. And if we look at China energy intensity, the number of gigajoules per person per annum, we're at about somewhere between 50 and 100, whereas in the United States, we're at between 300 and 400. But in India, we're at 15 to 25. In most of Africa, we're less than 20 gigajoules per head per annum. Picking up 20% of those differentials on India and Africa, just 20% from nuclear really expands the game out, and it's not included in that supply gap. So it's a very interesting place to be. Next slide, Jane. Tiris. So Duncan spoke a little bit about jurisdictional support. He spoke a little bit about resource. He spoke a little bit about the project flow sheet and the economics. And I think he's 100% on board with all of those things. Our Tiris project, in terms of jurisdictional support, I'll come to it in a couple of minutes, but the government of Mauritania, they haven't seen a mine built in 15 years. And they're very enthusiastic to see Tiris developed, and are giving us support at every level. Our resource, well, we've got 93 million pounds of uranium with a grade of roughly 250 parts per million. But our important characteristic is that we upgrade from that 250 parts per million to 2,000 parts per million by a simple separation process, which I'll go through a little bit later. We don't have any drilling or blasting. We don't have any grinding. We have free digging, and our ore body is finished once we get to about 12 meters depth. So we've got free digging and very easy access to the resource. We're planning to produce about 2 million pounds a year, although we've looked at expansion opportunities, and we'll talk about that a little bit later. Häggån is a polymetallic because of the way that the ASX imposes the constraints around mineral resources. We haven't been able to include our uranium as part of our studies, but once Sweden lifts that ban, we'll be able to include the 800 million pounds of uranium, and Häggån will become a very interesting project. Let's move forward, Jane. I talked a little bit about Mauritania. We're in Mauritania. We're in the northern eastern part of Mauritania. You can see SNIM there, which is a project that's been running for almost 50 years, producing iron ore. They've created a railway line down to the coast, and they're about 500 kilometres from where we are. The environment is one of very good support for mining projects. First Quantum have been there for 30 years with their copper mine. Kinross have been at Tasiast for 20 years. BP have just opened a multi-billion-dollar transaction with Mauritania and Senegal as a joint venture. So host community very strong. Political stability. President Ghazouani just last year secured his second 5-year term. We have all the licenses that are required ready to develop the Tiris resource. We have legislation that allows us to export the uranium. Mauritania is a member state of the International Atomic Energy Agency. It has been for a very long time. Orano are helping us with logistics to allow for the seaborne transport of our uranium, and there's a lot of collaboration with the US. So let's keep going, Jane. Project economics post-tax, our NPV is at about 500 million on the current project, with a 39% IRR payback over 2.25 years. We've done some sensitivities. If we hold the resource at the same level and increase production from year 3 to 3 million pounds, we drive that NPV up to 520, 530, assuming we don't find any more resource. We have operating costs at about $35 all in, and about 31 on an operating cost basis. So we are going, whatever people have been talking about, we need to see increases in uranium price before people are going to pull the trigger on adding new greenfields capacity. We do not need that. We have capex of about 230, and we're deep in discussions with financiers that I'll come back to. And we have very substantial exploration potential that I'll come through to. Jane, let's go to the next slide. We probably don't need to go through that because I think we've been through that. But 500, yeah. Keep going, Jane. As I said, we take the material out of the ground at about 250 parts per million. We put it through a scrubber, and the fine material goes off to the process plant. The fine material is about 75 microns. It represents about 13% of the mass and 91% of the contained uranium. And 87% of the material just goes, it's larger size, and we just put it straight back in the pit. So we're only processing 13% of the mass through our flow sheet, and we're producing about 2.1 million pounds. We're mining about 7 million tons of material. As I said, we're only digging to about six meters. We're using conventional truck and shovel. We backfill directly into the pits, and so it's a very simple operation that sees us upgrade very quickly from 250 parts per million to greater than 2,000 parts per million. Let's keep going, Jay. Here's our flow sheet again, and we have four modular units. I think we will ultimately consolidate that to less than 4, and that engineering is underway at the moment. 91% of the uranium is picked up through that scrubbing operation. Then we put it through leaching, filtration, ion exchange. We precipitate out the uranium, and we put it on a boat. So it's a very simple flow sheet. You've seen it at Langer Heinrich, and we're pretty excited about it. People who are scratching their heads saying, "How do you separate so easily?" The answer is we've tried it more than 500 times, and it works extremely well, the upgrading. So let's keep going, Jane. This is our resource, 91 million pounds. We did a little drilling program last year. One of our shareholders we announced the drilling program where we said we're going to do $4 million on drilling. One of our shareholders wrote to us and said, "Why would you use $4 million on drilling?" All we did was increase our resource by 55% for $4 million. We've paid about 20 cents a pound for our uranium. We've identified this group of resources here that you can see on this page, and that's where we found 91 million pounds. But Jane, if you go to the next page, we have asked the government through lease applications to increase that lease area by 28 times. So if you see the blue area on the right-hand side of the slide, the blue area is the resource area that we have defined the 91 million pounds on. you can see the radiometric targets that we've identified in the lease areas that we've put exploration targets on. And we're pretty excited about the untested potential. The other important thing to see on this slide is the area at the bottom called the Chiodini Basin. This has been a source for SNIM, the local state-owned iron ore producer, who's been operating for 50 years. Chiodini Basin is their source of water. You may think that being in the middle of the Sahara Desert, that water would be a problem. We had our friends from Knight Piésold do a little drilling program for water with us, and we're capable of producing about 75 litres per second. So water from the Chiodini Basin is a very substantial resource. So number one, we've got a fantastic resource that we've used to base our feasibility study off at Tiris East. We've got our foot on some very substantial expansion opportunities. We've got access to a government that's very supportive of us, and we've got access to water and other resources. Jane, if you could just go to the next slide. Uranium for Tiris, we've got all of the licenses ready to go. We've got the resource, we've got the NPV, and as I said, if you use that alternative production scenario where after year 3 we drive up to 3 million pounds, that NPV increases by another 10%. Project funding, we're in discussions at the moment with a Western sovereign development bank. We're in discussions with a number of strategics, and we're in discussions with a number of traditional financiers. I'm hoping that financing will certainly be done by the end of this year, but I'm hoping we'll get something announced in Q3 or early Q4. Early works, we've got a little plan to get our campsite underway and some infrastructure underway this year. We've got a little bit of our production off taken at the moment, and we have a potential contract with a US nuclear utility. But because we're talking to strategics as part of our funding plan, we've been pretty cautious about taking that offtake too far. We think we'll be at a decision to mine before the end of this year, and we have about an 18-month construction period. On the right, you can see some helpful photos. You can see it's a pretty flat environment. You can see it's a pretty dry and sandy environment. You can see the water drilling in the background. So very simple operation, and we're hoping to push the go button during this year. Jane, next step. Häggån, as I said, we were with the Parliament this last week. They're looking to overturn the uranium ban in January. That will allow us to really put some focus on the Häggån Project. It's a very large resource that we've got our foot on. We've got a foot on 2.5 billion tonnes with 800 million pounds of uranium there. Our studies to date, which show NPVs around $1 billion, don't include any credit for uranium. They were just selling the other polymetallic products, vanadium, sulphate of potash, etc. Once we include the uranium, even at a small rate of about £1 million a year, that NPV is going to become much more interesting. Jane, do you want to go to the next slide? So you can see this is using the study that we did, which was very high level, was only accessing 3% of the resource. So if you look on the right-hand side of the slide, the mineral resource that we've identified is that area in pink. And that contains 59 million tonnes of polymetallic ore, from which we would produce on that high level study something like 10,000 tonnes of V2O5, something like 215,000 tonnes of sulphate of potash, and something like 1 million pounds of uranium over a mine life of 17 years. But this represents only 3% of the resource that we have available to us. Capital cost of something like 600 million, operating cash flows somewhere around 300 million, all-in sustaining costs about $3 a pound of vanadium, but we'll convert that into uranium shortly. Payback period a couple of years, and a post-tax IRR of in the 30s or 40s. So why don't we keep going, Jay? So for us, Tiris and Häggån are cleaner energy suppliers in an energy-hungry world. Tiris is near-term, great economics, great support from government, great resource, very expandable, fully licensed. We're in discussions with financiers, hope to be in production in 2027. And we have very substantial growth opportunity at Tiris, and Häggån is an undiscovered gem. So thank you very much for your time.
No, Phil, thank you. I think keeping you up for as long as what we did, particularly while you're in the UK, I appreciate it. And thank you so much. It was Guy's fault for keeping us on the line for so long, as always. But Phil, I'm going to jump into some questions because we did get a lot that came through before you jumped on the call. So Tiris Project is described obviously as a near-term uranium producer. It's got outstanding economics. So again, walk us through how the project's simplicity and low-cost structure give Aura that competitive advantage, particularly in the uranium market today.
Yeah, Jane, if I can get you to go back to slide 12. Yeah, so you ask about simplicity. We are very shallow digging. You just blow the sand off the surface and then dig for 6 meters with a strip ratio of 0.8 to 1. We only mine 7 million tons of material each year. We use conventional truck and shovel. We take the material out at 250 parts per million. We drop it through a scrubber. We separate out the minus 75 micron material, which represents 13% of the total amount mined. We send 87% straight back into the hole, and we only process that 13%. So that is at the heart of why does this thing work? We only process 13%. Then we put that through a very simple, well understood technology approach. Why else? The answer is because we've got great expandability and we've got a great host government.
We've discussed this a lot on today's webinar. It's been the topic of conversation for the whole webinar, in fact, and you have discussed this as well. But With the rise of AI and data centers driving that demand for carbon-free baseload power, how do you think Aura is contributing to this global energy shift? And what conversations are you having with potential off-takers in tech or utility sectors?
Look, as I said at the outset, the energy per capita around the world is growing, and it's growing in hungry places. Are we ready to sign up with AI opportunities? Absolutely. As I said, we've been keeping our powder dry or our yellow cake dry, because we've been focusing on how do we put the 250, $300 million of capital funding together, and we're talking to strategics who are enthusiastic about helping AI players. We're talking with traditional players, and we're talking with a Western Development Bank about how we can supply each of those people with strategic uranium.
Sounds exciting. I think let's go back to the resource at Tiris. So obviously we reported a 55% increase in mineral resource and a 49% increase in ore reserves. So how does this enhance scale influence in the company's long-term development plans in Mauritania?
It underwrites our feasibility study. It gives us a 27-year life, 25-year life. It underwrites our economics. It keeps our expandability options available, and that was what allowed us to look at expanding to 3 million pounds. I'm sure that some of that 28 times area that we've asked the government to appropriate to us will even further expand that resource and give us greater optionality.
I guess so, yeah. And I think, look, we actually had this conversation earlier as a shareholder myself, but and one you probably get quite a fair few times. But Northern Mauritania, it's obviously being positioned as a new uranium province. You've already got that tenement package, and you've applied for a significant package of new tenements. Maybe give us a bit of background on Mauritania and what's the broader vision for the region? How confident are you in its untapped exploration potential?
Oh, well, if you go to that slide again, Jane, slide number 14. So our feasibility study, our development opportunity is the blue area. That's what underpins the Tiris project. Those red dots that you can see through the green application areas are where radiometric signatures have been identified from earlier exploration work. And so why do we think there might be uranium there? Well, the radiometric signals give us pretty good indicators of that. And as we have looked through, as we've reconciled the radiometric signatures at Tiris East against where we've actually found the resources, there's been very high correlation.
And look, I think finally, FID is expected for the end of the year, and uranium production expected by 2026, 2027. Perhaps just reiterate to the attendees online, news flow catalysts they should be watching out for.
Yeah, by all means. Well, news flow for us is slide 15, and we've got all of the necessary licenses. We've got the capital cost work being re-reviewed and opportunities for sourcing nailed down and refined, and that will happen in the next couple of months. So confirmation on capital. We've secured the water for the project. Basic engineering, as I said, the basic engineering will be completed in July. We've got some early works that are going to happen later this year, and we've got some off-take discussions and financing discussions by the end of the year. So all looks pretty helpful at this moment, Jane.
Yeah, absolutely. Phil, once again, thank you for sticking on the line as long as you have. And if we've missed any questions, please feel free to reach out via the contact details on the bottom of the ASX releases or via info@janemorganmanagement.com.au. But Phil, thank you again for your time.
Thanks, Jane. Thank you, everybody.
And thank you all for joining us for the JMM and Tribeca Nuclear Energy Virtual Event Series. It was a pleasure to host you again today. And again, if we've missed anything, reach out. But we look forward to hosting you next time.